Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to start off by taking a look at the ETF dashboard. Then we're going to look at the three major indices, the Dow, the S&P 500, and the NASDAQ Composite on a monthly and weekly basis, side by side. And then I want to drill in, take a look at the Russell 2000 ETF IWM and see what the Elliott Wave picture is on that. It's been kind of interesting. The all-time high for it is all the way back in March, and it's still holding. And then I want to take a look at the high yield bond fund, TLT, and the 10-year yield, and the dollar index. All right, let's get started. So here's the ETF dashboard for the week ending July 31st. We have 16 sectors in here. Actually, there's the major S&P sectors and then some subsectors. Last week, or the previous week, there were 14 sectors up and 2 down. This last week, there was only 10 up and 6 down, so a little more easing off of the extreme that we had the week before. The biggest performer was the materials, XLB, up 2.8%, and the weakest was consumer discretionary. It's interesting over here, all the sectors are still positive for the year, and retail continues to be the strongest performer, up 48% for the year. When you look at the index ETFs, the NASDAQ 100 led to the downside. The only one that was positive was the Russell 2000, up 0.68%. They're all positive for the year, and now the S&P 500 is edging out the NASDAQ 100 to the upside slightly. When you look at the emerging markets picture, a little bit of a mixed picture, but the worst performer is FXI, which is the reason I say China, Hong Kong is because many of the stocks in here are large cap stocks listed on the Hong Kong Stock Exchange. Okay, so this is not tied directly to Shenzhen or mainland China, but down 5% for the week. Pretty strong move as China got hit. And let's see, up 2% for Russia. I think Russia seems to be in sync with oil quite a bit, and Russia's still the leader to the upside for the year, and FXI is the leader to the downside. Commodities, oil was the strongest, natural gas was the weakest, but man, natural gas has been having one heck of a year. It's just pretty amazing, UNG. But oil has now edged it back out again, resumed its leadership position to the upside for the year. And gold is still kind of bringing up the tail end, but I'm not sure that's going to hold for very long. We'll see. In the currency area, the US dollar pulled back this last week, and British pound was the leader to the upside. I'm not counting this. I'm just looking at the traditional fiat currencies over here. You can see how GBTC, the Bitcoin ETF, really bounced back this week, 28%, but now it's back positive for the year, 8.5%. And then here's the snapshot for the year. The yen continues to be the weakest currency for the year at this point. In the bond sector, TLT was positive, and HYG slightly negative, but it is still the strongest for the year, HYG is. All right, that's our snapshot for the ETF picture. Let's take a look at the major indices. All right, let me shrink this down. Okay, so here's side by side. Here's the Dow, the S&P, and the NASDAQ Composite. Monthly views, you can see big, strong moves to the upside here. Everything is sitting at all-time highs on a monthly basis. And now, what's interesting is this is going literally straight up on the S&P. Now, I mean, the NASDAQ Composite is too, but look how, it's had some corrections in here. I guess the S&P has too, but it just doesn't seem like it's had very much. And especially since right here, since September. I mean, what have we had? One down month since September? Yeah, it's just amazing. It's just going straight up. So let's go back and take a look at the high in 2007. And how do they look here in 2007? So not so much straight line at that peak in 2007. And you can see we had a peak in July, right here, July 2007, had a pretty sharp pullback. and into the low in here. See, this is August. Yeah, this is the month of August right here. And then we rallied back into October, and then that was all she wrote. Now, you notice how when this starts to break down, you start to get closes below the prior month, and sometimes, like in here, below the prior 2 months. But you definitely, to me, the first signal that something may be breaking down is when you get a close below the prior month low. Now, you get a little bit of follow through sometimes, and sometimes you don't. But I'm just saying that tells you that you're getting a little bit of weakness. We're not getting any of that just yet, but we need to be on alert for it. That's why we're looking at a lot of the weekly and and of course the daily setups and the patterns and everything else. And of course, when you start to then get closes below the 10-month moving average, you're starting to get a serious breakdown. Now, let's go look at the 2000 peak. So here's how it looked in 2000. Now, what's a little eerie is what's happening today, what we just looked at for the current, look at it, it's looking kind of like the NASDAQ did in 2000. And, you keep going straight up, and at some point you just run out of fuel and you just fall straight back down to earth. And, yeah, you don't do it in a complete straight line, but almost. So a little bit, just look at this picture and now look where we are today. Okay. So I'm not touching the time frames. I'm not touching the picture. Everything is the same. I'm just looking at, this looks very familiar. This looks very familiar. And then it almost looks like we're duplicating over here too, to a certain degree, but even more so with what's happening in the S&P. Let's take a quick, I'm going to convert this to weekly just to show the weekly closes. Okay, here's how we look for the week. The Dow was down 126 points for the week. The S&P was down 16, and the NASDAQ Composite was down 164. So everything was slightly down this week. Pretty tight trading in here for the Dow too. I mean, look at that trading range. It could be just a little pause week. We'll see. It seems like the market wants to continue to try to push higher, but I don't know. We're starting to push the edge here. Let's go back. I want to look at the Russell 2000 this week. Here's the daily view and here's the weekly view. So the Russell was down on Friday, down 147, up slightly for the week. Now here's that peak on a weekly chart over here. Here's the high. You can see we've really kind of just been in a range, a sideways consolidation move in here. Now this is my preferred count that I've got. Here's that March high right here. Now I've got this as my preferred count just because this has refused to break down. But if this were to continue to come down and break this trend line in here, okay, right here, here's a 2-hour view, 2-hour daily chart. If this were to start to break down, break this trend line and definitely take out this low, I got to lean back into the alternate count. And the alternate count would say we're working our way down from that high. Okay, it would be like this, like we'd have a 1, 2, and that we were working our way down in a third wave. And this first wave has been very problematic, but it could be a leading diagonal pattern in here and then a zigzag. So this is a possibility, but I'm not jumping to that conclusion yet. I'm going to lean into the bullish scenario as long as this wants to continue to work its way higher. All right, so that's the picture here in the Russell. And so where are we looking at? Well, wave 3 up here, normal length wave 3. I'm talking about looking for 5 waves within this 5th and final intermediate wave push. So this third wave, if I were to get a normal length wave 3, I would be looking up here around 236. Let's just say 237. Okay. So that would be my initial target, and we'll see, of course, you need 5 waves within that third wave. So we'll watch and see what kind of wave structure do we get as that continues to unfold. Okay, that's the Russell 2000 for this weekend. That's the picture as it looks today. It may be a completely different picture a week from now. We'll see. All right, let's take a look at the high yield bond fund. Okay, here's HYG. It was down 12 cents on Friday, down 11 cents for the week. It's just kind of it had a little dip here in the middle of the week, and then it came right back, still staying above the 10-day moving average, but it hasn't pushed above these highs. It hasn't pushed to new highs for the year. And here's that yearly or weekly look, and you can see we're just up here kind of nudging up where we were January, February of 2020 prior to the big sell-off that happened. So we're right back up, maybe running into some resistance in here. We'll see if this wants to hold up or break down. And of course, you know, we started to get a pretty strong little break in here, basically saying risk off, but it came back fairly quickly. All right, so that's the high yield bond fund. We're keeping an eye on that. Let's take a look at TLT. TLT was up 70 cents on Friday, up $1.02 for the week. The Elliott Wave picture that I'm working in here is this count right here. It's that we are in a wave 4, the peak of a wave 4, working our way down. I'm expecting a move down. That's what I'm looking for. And if we get that move down, then, you know, to start that, we need to break this trend line, first of all, okay, break down. We've been very consolidating, you know, this last week, pretty much just been consolidating sideways. I've been watching for this breakdown. We just haven't got it. And if we get that, then here's what's going to happen. Then TNX, which is the 10-year yield, it's going to start rising like crazy. Okay, and then it's just a matter of what kind of a move, how big of a move are we going to get? You know, everybody talks about 2%. The last time we were at 2% closes was, you know, July of 2019. The last time we closed above 2%. So we'll see. You know, I've got this dotted line because of resistance in here that I had identified, and we got up into this zone, and sure enough, a lot of resistance came in. Okay, so that's the picture on the 10-year yield, and watching TLT and the 10-year yield to see it closed at 1.24% on Friday. All right, the dollar index. Now this is interesting. It had a big bounce up on Friday. For the week though, pretty weak. I say cents, but I know it's an index. You know, it's down 74 cents for the week. You know, the picture I've got on the dollar index is, yeah, okay, this is the one we've been working, which is me looking for further correction to the downside. Now, I'll tell you that this corrective pattern in here, this WXY I've got for this deep zigzag, it doesn't fit this picture the best, and we'll see what happens. I mean, we got the breakdown out of this channel, and it looks like it wants to keep coming down. We'll see if we continue to get that. But the reason I'm watching this over here, 93.44, if we reverse and push back up, we take out 93.44, then we are going to be back over to this scenario, which says the dollar bottomed in January and it's working its way higher in an impulsive move. So that's going to be really interesting, but I'm not moving to that scenario until this thing wants to show and tell me that it's definitely wanting to go higher and takes out this high right here first. And then if it does that, most likely it's going to take out 93.44. Okay, so right now, here's the current picture. We'll see what happens. All right, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber, hit that little subscriber button. If you'd like more of this kind of information on a regular basis, we talk about these, all of these instruments and a lot more every day over at joehenches.net. Check out the website, check out the membership. Everyone have a great coming week here, and we'll talk to you on the next video.